Hello and welcome to this very important and exciting Ninepoint webinar where we are in discussion with two of the most informed and most influential individuals in the world of blockchain and crypto policy, innovation, and business. Donald Trump's decisive victory in the presidential election sent shockwaves through financial markets as the so-called Trump trade ignited around the world. The dollar gained the most in years, bonds slumped, stocks surged, and gold dipped, at least temporarily. And so far, markets have held a lot of these gains, and many investors are optimistic about what this new presidency might mean, both for American business and, of course, for their portfolios. Now, Benjamin Graham, the father of value investing, once said that markets are voting machines in the short run and weighing machines in the long run. And it appears investors, at least for now, are voting with their feet and with their dollars, sending many assets higher. But it may take months, if not years, to weigh the true impact of a Trump presidency on industries and on asset classes. But what is undeniable is that the biggest winner so far has been Web3, the blockchain-enabled internet, and the foundational assets of the new web, such as Bitcoin, Ethereum, and Solana. Industry advocates and investors have high hopes for what a Trump administration might bring, and they're reacting in kind by plowing record amounts of money into the asset class. So among other things, advocates hope that the new administration will appoint a crypto-friendly cabinet and replace the heads of major agencies, like at the SEC, putting relations with the industry on a more positive footing. They hope that the new administration will take a more laissez-faire approach and allow entrepreneurs and startups to experiment and innovate with confidence in America. They hope that the new administration will enact sensible new regulations around everything from stablecoins and smart contracts to other Web3 technologies. And they hope as well that they may even create a Bitcoin reserve, a strategic reserve, adding Bitcoin to the central bank's asset mix. Okay, so that's the vision for what a Trump presidency might bring. But there is a fine line between vision and hallucination. So today we're here to talk about the reality on the ground, so that you are better informed and can position yourself and your clients' portfolios accordingly. So what can investors truly expect from the next administration? What does it mean for crypto assets? Well, to help answer those questions, we have two of the country and industry's most visionary leaders, advocates and thinkers. In my view, there are frankly no two better people in America to comment on this critical topic at this important time in history. And they both just happen to be two individuals with whom I've had a long-standing relationship and have had collaborated with before in the past. And I'm so absolutely honored and delighted that they took time out of their very busy schedules to join us. So without further ado, let me introduce our two panelists. The first is Christopher Giancarlo. Chris served as the 13th chairman of the U.S. Commodity Futures and Trading Commission, the CFTC, considered one of the most influential individuals in financial regulation. He also was a member of the U.S. Financial Stability Oversight Committee, the President's Working Group on Financial Markets, and the Executive Board of the International Organization of Securities Commissions. Giancarlo is the author of Crypto Dad, The Fight for the Future of Money, an account of his oversight of the world's first regulated market for Bitcoin derivatives and the coming digital network transformations of financial services. Giancarlo is a senior counsel to the international law firm Gallagher, co-founder and executive chairman of the Digital Dollar Project, and a director, advisor, and angel investor in numerous public and private technology and financial services companies. Okay, our other panelist is Perianne Boring. Perianne is the founder and CEO of the Digital Chamber, the world's largest trade association representing the blockchain industry. The Chamber's mission is to promote the acceptance and use of digital assets and blockchain-based technologies. Working very closely with policymakers, regulators, and the industry, the Chamber advocates for a pro-growth policy environment that fosters job creation, innovation, and investments. And if that wasn't enough, Perianne was also named one of America's top 50 women in technology by Forbes and one of the 10 most influential people in blockchain by CoinDesk. Chris and Perianne, welcome to the show.
Great to be with you, Alex.
So we got a lot to get through. We're going to do our best to cover it all in about 50 minutes here. Let's start off with this question to get things started. So Trump's rise to becoming the most, I think, pro-crypto presidential candidate really in history caught some people by surprise. Until recently, it was reported that he wasn't exactly a huge fan. And while president, he apparently wanted to ban Bitcoin in 2020. But things really changed this year. What happened? Chris, do you want to take that one?
Sure. It's true that Trump, in some of his public statements, certainly during his first term, was never positive about crypto. A lot of it was referred to in terms of what challenge it might present to the U.S. dollar. And Trump has been adamant that that steps need to be taken to preserve the dollar's reserve currency status. But don't forget that it was actually during Trump's first term. In fact, it was during the first year of Trump's term that the CFTC, under my leadership, but with him as president, greenlighted the world's first regulated market for any type of crypto derivative, and really the first crypto regulated framework of any major developed economy for Bitcoin futures. And now we are almost 7.5 years later, and that market is deep, it's liquid, it's transparent, and it's very well regulated and relatively free of fraud and manipulation. So what Trump put in place 7 years ago has been very, very successful, and that was in the area of crypto. Contrast that to what you've seen over the last 4 years when the United States has really taken a step back and become an environment hostile to crypto. So I don't think if you think about it and dig down a little bit, it's not so surprising that, and I'll say one other thing, the one thing that motivates Trump is economic growth. He does recognize that the only way out of our mountain of debt is through economic growth. Consistent 3 to 4% year on year economic growth is the only way through, and it's the only way out. And he sees not just crypto, but AI, quantum computing, nanotechnology, biotechnology, energy production, energy exploration, and energy innovation as all the ways to get the United States to that 3 to 4% economic growth. So this is actually, I think, fairly consistent with his support for the dollar and very consistent with his determination to return the United States to a consistent and actually, quite frankly, world-leading pattern of growth.
Well, it's a very interesting answer, Chris. And recently, Trump announced the combination, I guess, of crypto and AI as these two key technologies that the administration views as being, I think, central to American competitiveness and to its continued lead and dominance, both in finance and in technology. And to have both of these things on equal footing as two priorities, I think, is really significant. Perianne, though, it's also true that this became an election issue in 2024, probably more so than in any other election in the past. And Chris alluded to the fact that the previous administration, or I guess the outgoing administration, wasn't always very kind to the industry. And the industry kind of took matters into their own hands, raising record amounts of money to try and support candidates that were supportive of the industry. But it wasn't just donors. It turns out that there were millions of people in the United States who really cared about this and made it a priority for them when they went to the voting booths in the most recent election. And as a result of that, we saw not just that the most crypto-friendly president was elected, but that we saw, I think, the election and the support of many people in Congress, both in the Senate and in the House of Representatives. So now it looks like we have one of the most pro-crypto Congresses ever. And I know that the chamber works very closely with lawmakers, both at the state, local, federal level, to advance your priorities. What does it mean now that we have the most pro-crypto Congress in history?
Yeah, you're right. We are walking into the 119th Congress, which will kick off in early January, with over 290 members being sworn in that are pro-crypto. As someone that's been on the front lines of digital asset advocacy for over a decade, this is huge. I mean, I helped recruit our very first congressional champion for digital assets back in 2014. So we went from one about 10 years ago to 290 today. And this is a bipartisan group. It's Republicans and Democrats alike. So we now have that political alignment in the House, in the Senate, and in the White House with President-elect Donald Trump to actually get some meaningful policy into law that's going to support and encourage the development and further investment of blockchain technologies in the United States. So it's extremely exciting. And Alex, you were mentioning just the election and how did this industry influence the election. We did a poll that we released over the summer, we did a national study through the month of September, really analyzing who is the crypto voter and what we called the National Crypto Voter Block. In 1 in 7 likely voters. So these aren't registered voters. These are your active voters, the people that are most likely to show up to the polls. 1 in 7 consider themselves in the crypto voter block, meaning that digital assets is a determining factor in who they cast their vote in. So this is a very large community that's tens of millions of people across the United States that are supporting crypto and digital assets. And then digital asset industry was the largest corporate donor in this election, which is just massive because this is a $2-3 trillion market cap. It's still rather nascent and an early industry. So to be the largest corporate donor shows the maturation of the industry. But I think what really influenced that is the past 4 years of the Biden administration's war on crypto, where so many companies have been debanked or pushed out of the country altogether, or businesses have just gone under because we did not have a regulatory framework supporting this space. This industry really understood what it felt like to be have a war from the government perpetuated on your industry, and folks rose to the calling and said, we need something better. And that's where we are. And just to share my own personal views, I'm sure everybody saw the 60 Minutes crypto episode over the weekend, and I shared some comments on my X account about it. Whenever you see spades starting to gain traction, when we have exciting moments like this, and there's been several over the past decade, there's always out some FUD, Indian doubt, what we call FUD, try to dissuade people out of this space. At its heart, blockchain technology, it's about freedom. This is about a freedom-enabling technology. It's open source technology. Cryptocurrencies are open. They're permissionless for anyone in the world to participate in these equitable systems to transact. And I think that really has resonated with the Trump family of having a technology that can be a tool to exercise some of our most important rights as Americans and just citizens of the world as well. Open source software is protected by free speech in the United States. So for me, and I think so many of the members that we represent at the Digital Chamber, this isn't about making money. This isn't about business interests. This is about protecting some of our most sacred rights as Americans. And I think that's why so many people showed up, voted pro-crypto. It's not necessarily about crypto. It's about the rights that this technology enables. And that's something that's so important back here home in the United States.
Well, it's a very interesting point. And you mentioned also at the outset about how 1 in 7 likely voters felt that this was an issue that may be the issue that they would vote on in the election. Now, what's also very interesting about a lot of the data is that this is a very bipartisan issue, at least at the voter level, maybe not at the government level, but at the voter level, it more or less splits kind of 50-50. And you mentioned some of the reasons why, the average American voter might care about this. Number one, it is freedom-enabling technology, the ability to own and control your own assets, own and control your own data online, your own digital identities. These are things that are enabled with blockchain and digital assets. And then for, people who are worried about the concentration of power in big banks and other large companies, this is something that decentralizes power back to the community level, to the individual level. And I think that's something that really resonates with people both on the right and on the left. And that's been true at the voter level, right? And that's what we saw in the most recent election. Chris, a prominent VC, Brandon Potts of Framework Ventures, told us recently on our podcast, DeFi Decoded, that crypto has been operating in a regulatory gray area in the US for most of its existence, and that just by bringing it into the light, will have a transformational effect. Now, as you alluded to in your first answer, it hasn't exactly been operating in a gray area. In fact, there have been a lot of very meaningful steps that have been taken to clarify some of the rules of the road. But it is true also that I think a lot of innovators historically have kind of worried about what the regulatory standing is in the US around some key issues. So I'd love to just understand a little bit better, like what are some of the big priorities that are still in this gray area that by having a pro-crypto Congress and an administration that's making this a priority, we might actually get some clarity on. Because I think that's something we'd like to understand. There's the vibe shift, which is really significant. There's the change in leadership at federal agencies. But what are the new kinds of legislation we may see to help kind of push the ball forward?
Yeah, let me get to the answer to your question by starting actually where you and Perianne left off by pointing out that crypto is much more than just some funky new asset class to speculate in or invest in. It's actually a new architecture of finance, a much more decentralized, wide-ranging, lack of limited central control, a system that brings liberty and freedom back to people. And who could be opposed to such other than perhaps those centralizing forces and especially political forces that, at least since the great financial crisis, have found themselves in greater possession of control over to whom capital is allocated in systems. So it's no surprise that the hostility to this innovation has largely come from Washington and the political class that fears a loss of the control they've gained recently in the last decade or so over the allocation of capital. It's interesting that at the same time that crypto's been limited, so has small bank formation. We've virtually had no small banks created since the great financial crisis, and our large financial institutions have gotten larger, and Washington's budget has gotten larger. So this innovation cuts across the trend of the last decade and a half of greater political and centralized economic control in Washington. So no surprise the hostility to it we've seen over the last 4 years. And to your question, the hostility has not been because there are no pathways to bringing this innovation into proper regulatory oversight. We were able to do it at the CFTC in 2017 for Bitcoin futures and then Ethereum futures. In fact, the SEC was even able to do it for ETFs on those same Bitcoin and Ethereum futures that we created at the CFTC. What we've had is just an unwillingness over the last 4 years to really take the existing rule sets and work within them. There's an amazing amount of discretion in the securities laws, in the American securities laws, and the American commodities laws for regulators to innovate with the existing rule set if they're willing to do so. Now, if they're not willing to do so, sadly, there's just as much discretion for them to war against a new innovation as the Biden administration has truly done against crypto. And it's not by omission, it was by commission. Their efforts to debank crypto founders, to debank crypto companies, to the SEC chairman's warning against lawyers not to provide legal services to the industry, warning against accounting firms not to provide accounting services. I mean, those are very, very aggressive actions by the prior administration. The biggest change of all the changes that are about to come in, I think, 39 days from now, are simply going to be replacing ending the crypto hostility that exists. Following that, as you say, it will be the hard work of getting good policy in place. But step one is to end the debanking. Step two, ending the opposition to self-custody, dropping the regulation by enforcement, and replacing those crypto hostile regulators at the SEC, but other agencies, banking regulators and consumer finance regulators, with regulators that will be willing to work within their discretion to get some good policy in place. I fully expect it to happen. And the first step is ending the hostility, which has been very, very pronounced over the last few years.
Yeah, it certainly has. And it's something that I've always found really confusing. and I think kind of almost anti-American in a way. I think everyone on this call remembers the history of the internet. The internet was a technology that was built by the U.S. government and then put into the public domain to be commercialized. And the government supported actively the commercialization of the web through the introduction of new policies and legislations that made it easier and not harder for companies to use this new open source technology. This time around, we have, I think, something similar, though its origins are not in government, where there's this new technology that has a lot of potential to, as you say, reshape the financial industry, change the underlying plumbing, enable new kinds of applications and business use cases. But it's been met with this hostility, which has caused a lot of founders to operate in a real limbo state. I would say almost in a state of fear, actually. And in some cases, the most extreme cases, to leave the country altogether, which
Alex,
is something
imagine if 30 years ago, the United States was so concerned not to displace the post office that they threatened users of email and developers of email systems with court actions and enforcement actions. In fact, we didn't do that. We allowed that change that took place. The Postal Service is still around, but we allowed the communication process to be much more democratized, lower cost, instantaneous, with that enlightened bipartisan approach to that first wave of the internet. This time around, unfortunately, our political class have gotten in the way of this innovation and its democratizing function this time around in finance. But I think we're going to look back historically 10, 20 years from now and realize that was just a rearguard action by an old class of thinkers that will be quickly displaced and sadly won't have a prominent place in the history books for their opposition to this innovation.
Yeah, very, very well said. So Perianne, one of the things that Chris mentioned was that there is going to be a change in leadership at some of these federal agencies, including in the SEC. And you are very uniquely positioned to talk about this particular issue, because the incoming chairman of the SEC, should he be confirmed, is a guy named Paul Atkins, who is a veteran regulator and a person who's very well respected in financial services and financial regulations. But he also happens to be a big fan of blockchain, and so much so that he has been a long-standing advisor to you and to the digital chamber. So you've gotten to know Paul over these many years. What can we expect, given this sort of unique point of view that you have, what can we expect from a Paul Atkins-led SEC?
Yeah, I think I can take credit for orange pilling Paul Atkins. I've been working with him since 2017, and he's
for those who don't know, that just means convincing him of the merit of Bitcoin and the broader technology.
Yeah, sorry, it's a compliment. It's not a drug. I originally brought him on to serve as the co-chair of our Token Alliance. That's a working group that we operate inside the digital chamber that's been set up to work on issues between the SEC and the CFTC. So we had Paul Atkins as our, he's a former SEC commissioner, and then Jim Newsom, who's a former CFTC chairman. The two of them have been co-chairing that group since 2017. And then he later came on and was given an additional role as a member of our board of advisors, but he's been on the ground floor working hand in hand with us and our 200 plus members to try to help develop that regulatory clarity and framework that we need for digital asset markets. So here in the United States, we kind of have a unique framework where we have the SEC, the Securities and Exchange Commission, overseeing equities, securities, and then the Commodity Futures Trading Commission, or the CFTC, that separately oversees the futures markets, including the derivatives markets and the commodity markets. So digital assets are commodities. However, this has been a bit of a turf war between the SEC and the CFTC for a number of years. On one hand, we've had the CFTC making speeches and statement, many digital assets are commodities, but then Gensler's tenure, he's really tried to expand the SEC's jurisdiction and saying all of these cryptocurrencies are securities and thus in the SEC's jurisdiction. And then coupled with that, a very strong regulation by enforcement posture. So for companies who are operating, like all of the exchanges, token issuers, others, the SEC is coming after them and either issuing Wells notices or enforcement actions, threatening companies with investigations and subpoenas and things like that, really looping everyone into the securities regulation. So one of the biggest issues the industry has had is when is a digital asset a security and when is it's a commodity, and having in statute, the way that the agencies have been communicating that has been through, largely speeches and statements. So that's just created a horrible environment for businesses, and that's why so much of the markets have left the United States over the past several years. So Paul Atkins will be truly just a fantastic resource for our industry to have, serving as the chair of the Securities and Exchange Commission, because he has seen this firsthand in working with us, and is committed to getting that clarity to be able to define which digital assets are within the SEC's jurisdiction and being able to get them registered, regulated, and products out to the market, and then working with the CFTC to define what's in the CFTC's jurisdiction. Same thing on that side as well. So we can expect to get that regulatory clarity done through statute under Paul's leadership. One of the other things that I think we should be paying attention to, and I think we actually may be able to get done even before Mr. Atkins is confirmed for these roles, you're nominated by the president. So those formal nominations can't happen until he is inaugurated, which doesn't happen until January 20th. And then they still have to be confirmed by the Senate. So there's a whole confirmation process that has to happen on Capitol Hill. So it will take a little bit of time before he actually assumes power. So, and then Gary Gensler announced his resignation. He will resign on the 20th, the day that Trump is inaugurated and sworn into office. So in that kind of in between time, one of the sitting commissioners will be appointed as what's called the acting chair. Mm-hmm. And if I was a betting woman, I would bet it will be Hester Peirce, because she is the most tenured, longest serving person. So it's kind of right that it would go to her. So that would be my guess, is who gets to take that acting chair role. And Hester Peirce, the crypto Twitter community has renamed her as Crypto Mom. So we have Crypto Dad with us today, and Giancarlo, and then Hester Peirce is sometimes referred to as Crypto Mom. She's really a huge advocate, just been a champion for the industry as a SEC commissioner. So one of the things that she could do if she were to walk into this role is rescind or take down some bad stuff that's impacted the growth of the industry. One of the most egregious is what's called the Staff Accounting Bulletin 121. This was a bulletin that essentially prevented banks from being able to provide custody solutions to the digital asset industry. And this has really hampered institutional adoption. So as the industry is maturing and you have more larger players coming in, we need institutional grade solutions to serve institutional clients. And this was kind of one way that the SEC has continued just to throw sand in the tires of crypto innovation, is trying to stop banks from being able to offer those types of services. So that could be rescinded potentially before Paul is even assumes power, because the commission should have the alignment. Both Commissioner Peirce and UA have come out against this. So clarity, repeal some bad stuff, and then working with the CFTC to create the market structure, that mature market structure for digital assets, all of which will be extremely, extremely helpful in developing those markets here in the United States.
And Alex, if I can just pipe in for one point, the reason why the distinction between the SEC and the CFTC matters, it's not so much to determine who's the regulator of any given crypto. It's actually to determine what the disclosure regime looks like. In the basic purpose of both the SEC and the CFTC is to make sure that information asymmetries in any marketplace are evened out.
Yeah.
The difference is on the SEC side, the responsibility for doing that comes from the promoters or the issuers of securities. In the CFTC world, for most underlying commodities, in fact, for all underlying commodities, there are no central promoters. Mother Nature isn't a promoter of gold or oil or other things that come out of the ground, and she doesn't issue a financial statement or a disclosure regime. The way it's done in the CFTC world for commodities is that reliance is placed on third-party analysts and data providers and research reporters. And God knows in the oil market, the gold market, there are hundreds, and probably in Bitcoin, there are thousands. You only need to go on Twitter to find any given analyst of what's happening in crypto in any given day. So the role of the CFTC for digital commodities will be to make sure that there's adequate disclosure, but not necessarily a central set of promoters for that. In the SEC world for digital securities, this is where the SEC has really let us down. They haven't been willing to come up with a regime for that type of disclosure. Now, Europe, under its MiCA legislation, has found a way to do that using white papers and others. There's no reason why we can't do it. And as I said in my earlier comments, when there's a will, there'll be a way. And the SEC under Paul Atkins, who, as Perry said, has been a dear friend of the Digital Chamber. He's been a friend of mine since we were in law school together in the 1980s at Vanderbilt Law School. Paul is the right person for this job and is really going to be the person who's going to bring the intellectual capital to bear so we can develop these pathways toward crypto innovation, crypto regulation.
Well, I think that's a great summary, and we got into a lot of detail there, but just to give the key highlights, there's going to be a change of tone where it's more supportive of innovators in the industry, and that, more than anything, I think is going to help to kickstart innovation. You're going to get clarity between the roles within these two different groups and where their mandates stop and where they end. That might also lead to clarification of regulations, which could lead to more companies coming back to America, more enterprise and institutional adoption, more bank adoption, and the further integration of this technology into the financial system, all of which are things that the industry wants and which, I think we all agree are very good for the country. So I think that, there's a lot of technicality in that, but it's important to understand the nuance. Big picture, though, clearly this is very positive. I want to change to a slightly different topic, which is that a lot of people that are tuning into this show are new to this topic. They're curious about it. And I think what they see is Bitcoin kind of dominating a lot of the discussion. And I think it's hard for some to sort of square the circle of how can a government be supportive of a technology which itself sort of promises to disrupt or change the role of government as a currency issuer. And I think that there's a lot that needs to be explained and unpacked there. I think that a lot of people who have that point of view may not know, for example, that the killer use case, or one of the killer use cases for tokenization, for the digitization of value, is actually to create digital US dollars. And that more than really anything, will probably strengthen the position of the US in the world. And that Bitcoin may not act as a headwind for governments, but could actually help them in some key ways. So, Chris, I would hope that you could sort of shine some light on this topic because of your role in the Digital Dollar Project. And in the past, you and I have had these really great conversations where you've spoken quite passionately and eloquently about this. So tell us about that. Let's talk about Bitcoin stablecoins and the US dollar and what this all means for their role in the world.
Okay, and let me talk about why this time around I think we're seeing a different response from Washington than we did 30 years ago. When the first wave of the internet rolled out of Silicon Valley 30 years ago and rolled across the continent and the world, and it arrived in Washington, it did not encounter a series of ABC agencies whose job it was to, in a sense, protect certain existing activities like banking. In the United States, as probably your listeners know, we don't have one federal banking regulator. We have three: the FDIC, the OCC, and the Federal Reserve, and we have 50 states all with banking regulators. And so 30 years ago, the Internet of Information didn't find itself running headlong into some ministry of information. And therefore, it was easy for Washington to take in fact, information and communications are protected by the First Amendment, freedom of speech. And so Washington was able to take a hands-free, hands-off approach. And I would say that innovation ran into a regulatory light zone. Well, this time around, an internet of value, where instead of using the internet to record information, as the first wave of the internet did, this wave of the internet is about recording value on the internet. Who owns what and who's transferring what to whom on the internet, as opposed to recording it on bank balance sheets. This time around, this innovation is running into a whole host of federal regulators with incumbent roles in the existing system. So it's actually not that surprising that this wave of the internet is encountering a degree of rearguard action. But you also used the phrase earlier, anti-American, and I agree with that. Resistance to technological innovation is at heart, goes against the ethos of an aspirational immigrant society such as ours, where we've historically not only tinkered with new technologies, we've done so and led the world in doing so. This time around, one of the biggest, I think, disappointments for many of us is that we're allowing that innovation lead to take place elsewhere. And I think that's now going to be reversed. And I think that's going to be good news for everywhere, including Canada, which I think will very quickly follow U.S. lead, because in many ways your society is similar to American society. In fact, many of the leading lights in this are Canadians that have come down to the United States or are developing it north of the border as well. So I think we're going to see a lot of North American innovation in this leadership. Now, what about the dollar? In many ways, the dollar is one of the world's greatest brands. And you might even argue its brand network is greater than any other. You know, better than Coca-Cola, McDonald's, the dollar is recognized worldwide for standing for certain values of free trade, free enterprise, free commerce, and its network is extensive. The dollar is the world's reserve currency, moves through a dollar network across the globe that is second to none in its extent, second to no other currency in its reach and extent. And yet over that network, if you think about like a rail network, we're still running steam engines. An analog dollar that is still easier to transport from one continent to another by putting it in a suitcase and getting on an airplane, as opposed to sending a wire transfer, is a steam engine operating on the world's greatest rail network. What stablecoins are, you might think about them as running a monorail or a hyperloop over that network, replacing the steam engines with the latest type of rail technology. They move 24/7 instead of during banking hours. They move at the speed of light instead of the speed of air transport. They move at much lower cost and require much less intermediation. And so what stablecoins are showing us is that the globe's demand for dollars over that rail network has actually been underserved by an analog dollar. And we at the Digital Dollar Project, you notice we're a digital dollar, not a CBDC project. We are focused on all digital network forms of the dollar.
CBDC standing just CBDC stands for central bank digital currency.
That's what China is issuing in their digital yuan. That's what Europe is issuing with their digital euro. And the notion there is that there's a hierarchy of value in money, that there's a reason why when there's a run on the bank, people go to the ATM machine. They don't go there. They go there in part to take possession of their money, but technically what they're doing is trading in a bank as the obligee for the sovereign, for the government as the obligee. They want an obligation in the United States from Uncle Sam, not from a bank, because they're afraid that bank is going to go under. And there are people that have said, well, there's already been runs on stable coins. In such a run, where will people go? Well, if they can't go to a central bank issued US dollar, then they may go to a central bank issued euro. And so one of the things we do at the Digital Dollar Project is we're the ones asking the question, how do we future-proof our analog dollar for the coming world of digital networks of value, whether those networks are Bitcoin or Ethereum or stablecoins or otherwise? How do we protect the values on which the dollar stands, those values of free enterprise and free commerce? And how do we make sure the dollar protects its reserve currency status? And how do we do all that in this coming world of multiple different digital networks of value? As I say, some decentralized like Bitcoin, and others highly centralized and maybe highly commercialized like stablecoins. And and so that's the questions we're involved in asking.
Well, it's very important work, and stablecoins have grown to $200 billion of circulating supply in the absence of. And Perianne, this would be a great segue for you to tell us a little bit about stablecoin legislation, because I know that that's something that has been on the table, off the table, I don't know, for a very long time. And people are trying to get that right. And I'd love to understand, now that we have this incoming Congress, if you think something like that is possible, and what it could mean for the adoption of this technology in the financial system. And then I want to ask you a follow-up question, because Chris I don't think got around to answering it, which is this whole talk about Bitcoin reserves, of governments actually embracing Bitcoin, not just stablecoins, and how we're starting to see this uptake, not just at the country level in places like El Salvador, but at the state house level in Texas, Florida, Pennsylvania, here in Canada, the mayor of Vancouver proposed it, and of course at the federal level with the strategic Bitcoin reserve. So do you mind tackling those two topics, stablecoin legislation and the idea of a Bitcoin reserve?
Yeah, and on stablecoins, we recently released a report at the Digital Chamber called How Stablecoins Are Extending US Dollar Dominance, where we have looked at international survey data of stablecoin users to really understand who's using stablecoins and why. Stablecoins are being used in all continents around the world. And one of the, I think, misconceptions or potential criticisms is that, oh, this is just another crypto tool to support the speculative trading of digital assets. But that's not what the data is showing us. The number two reason why people outside of the United States buy stablecoins is to save in US dollars. This is really an amazing tool that we believe can support national security efforts because it takes dollars and put it in the hands of communities and people who otherwise would not have access to the US dollar. So this is extremely promising thing that we're seeing. The US is absolutely dominating the stablecoin space. Over 99% of all stablecoins circulating the world today are denominated in US dollars. So this is a huge opportunity. And our number one message to lawmakers, so we just released this report a couple of weeks ago, and I've been in DC the past 3 weeks meeting with lawmakers, sharing these findings and discussing the stablecoin legislation. Our main message is just don't mess it up. We're already winning this space, and we're already seeing a lot of promising results from this technology. Let's not mess it up. So there has been stablecoin legislation that's been circulating for 4 years now. And there's some good things that have been discussed and debated, and there's some things that would actually be very harmful to the stablecoin space that's been proposed and put forward. So there was efforts to try to get a stablecoin bill done this year. There's only a couple of days left in the legislative calendar before this session ends. I met with leaders on both the House and the Senate side of, where are we? Is this happening? What's going on with the negotiations? And there's Republican viewpoints, and then there's Democrat viewpoints. They have not come together. And those negotiations probably will not come to any deciding decisions this year. And the main reason is because of the election. Republicans did not expect to win everything. They won the House, the Senate, the White House.
Right.
So now they control the calendars in both chambers, in the House and Senate, and they have the majority. So they have the votes if they can get their party in order. To get things done, at least on the House side. Senate side, he probably needs 60 votes, kind of depending on how it's put forward. But Republicans have largely stepped away because they feel like they'll be in a better negotiating position in just a couple of weeks, which, for obvious reasons. So I think it's highly unlikely we're going to see a bill done this year. And it's really just because of politics. Now, going into next year, I mentioned just how important it is that we have a pro-crypto majority with over 290 members, both Republicans and Democrats. A lot of us in the industry, including myself and my team at the Digital Chamber, we're kind of walking into 2025 saying, we have a really big win here, and the anti-crypto army has officially been defeated. We're not negotiating against them anymore. So what I would expect going into the 119th Congress is a lot of improvements to the legislation, including the stablecoin legislation and the market structure legislation that's actually going to be even more friendly for the industry. So I think we will see legislation done next year. But just one more thing on timing, and I've met with House and Senate leaders just within the past couple of days. And we are not expecting, based on our conversations with the leadership, to see crypto legislation taken up at the beginning of next year. The priorities that they've outlined to us is a continuing resolution, so a spending bill, a farm bill, and a finance and a tax bill. So we're expecting those three pieces to go first before any type of crypto legislation is considered. So it's likely we won't actually start seeing crypto movement until the second half of 2025, potentially even 2026. But we are advocating to prioritize this as fast as possible. But just know there's other priorities in Congress outside of crypto.
Of course. And what do you make of this whole Bitcoin strategic reserve? There was a report today that BlackRock is recommending that clients hold 2% of their portfolios in Bitcoin, which I just think is notable because it's again more of this sort of normalization of the asset as this digital store of value, as a complement to gold and other assets. And now you're talking about governments, including the U.S. government, discussing this. Is this pandering to the base, or is this something that they might actually seriously take up? And what does it mean to you, in the Digital Chamber, and what could it mean for Bitcoin itself?
It's funny because I was meeting with members of the Board of Governors of the Federal Reserve System just last week, and I brought up, the strategic Bitcoin stockpile and reserve proposals that are on the table, and they almost laughed me out of the room and saying there's nothing strategic about Bitcoin and we don't need to stockpile it, and what is the point of this? But I don't think that's our core audience. But where there's a will, there's a way. And I was there at the Bitcoin conference in Nashville where Donald Trump gave his speech, and this was a campaign promise to the community. He said he will create a stockpile, and he outlined exactly how he was going to do it. We're going to take that 208,000 Bitcoin that the U.S. government already owns through law enforcement programs and move those over to the Treasury and save them, stockpile them, hodl them, not sell them. The White House, the President of the United States, has pretty extraordinary executive powers, and if there's a will, there's a way. So I would expect that to happen. I don't really see any reason why he can't get that done and get it done very quickly. That will have tremendous impacts on global macroeconomic issues. When we, as the world reserve currency, as other countries see us using Bitcoin as a strategic reserve asset or creating a stockpile, there will likely be many other countries, central banks, sovereign wealth funds that want to follow suit. So this is, it's hard to really comprehend just how important this will be for Bitcoin as an asset class. And that's just the beginning. Senator Lummis said, in addition to taking that 200,000, let's also buy an additional million. And then Bobby Kennedy, who's now, will be heading our Health and Human Services, he said, he upped that several fold and said, let's buy 4 million. So this is quickly getting very, very bullish, but having the best performing asset on the U.S. Treasury's balance sheet, why wouldn't you?
And
Right.
Alex, governments have been stockpiling commodities since the beginning of time. I mean, Egypt stockpiled wheat, Rome stockpiled olive oil, China stockpiles soybeans, rebar, and pork, and we stockpile oil, we stockpile gold in the United States. As the world's first digital commodity with a fixed supply, why wouldn't we stockpile it? El Salvador stockpiled Bitcoin when it was under $25 $25,000 a Bitcoin 2 years ago. They've had a 4x return on that stockpile. Why wouldn't we do the same thing in the United States and in Canada
and they've seen
and in Florida and in Texas?
Yeah, and they've seen their credit rating increase, improving as a result of that decision. Yeah,
lowering their borrowing costs. Yep.
Exactly. Actually, when I was doing the research for Blockchain Revolution, a book that I co-authored with my dad many years ago, we spoke to the Deputy Governor of the Bank of Canada, Carolyn Wilkins, and she told us at the time, 2015, that central banks and governments hold various kinds of assets, various kinds of commodities that are strategic, or monetary instruments that are strategic or useful. And so if Bitcoin became bigger and more systemically important, that of course they would consider it. So I think this is something that it's an idea whose time has come, right? This has always been something that's been discussed. And I do think for the reasons you've just described, it's very, very sensible. We have a few minutes left, and I want to get comments from both of you on a couple of things. We'll try and keep our answers really brief here. Chris, at the very beginning, you talked about how the priority for the new administration is economic growth. And economic growth comes from productivity gains, which usually comes from investments in technology. And that's why, to your point, investing in technology, tinkering with technology, sort of key to the American way in terms of like the business climate. Now, the Trump administration announced the creation of this AI and crypto position, the AI and crypto czar. And I think what's significant about that is that it's putting AI, which I think people understand sort of self-evidently is a very big deal, and crypto on the same footing, basically saying, in my view, that these are the two technologies that will be of strategic importance for the future growth of the U.S. economy. That's how I see it. Or maybe, am I reading too much into that? Chris, I'd just love your point of view.
Yeah, I think they are two of a group of technologies. Continuing the shale revolution is also part of it, and quantum computing and various bio and nanotechnologies are also part of it. A reason why I think those are put under one office is the belief that those are the ones that right now need a policy adjustment. In the case of crypto, it's ending bad policy, and Perianne very well pointed out the various legislative initiatives, and there's initiatives at the various regulators that need to be done. AI, though, also needs policy adjustment. There was work done on the Biden administration that would strengthen government control over AI, would make sure that AI couldn't be enabled to counter government narratives. And there's a lot of people in the incoming administration feel that government shouldn't be the driver of AI, shouldn't really have its hand on what messages can be conveyed and what can't. That should be much more democratically done. And so they want to counter some of that, what they view as mistaken and misapplied thinking to some new thinking around AI. So that's the reason those two have been put in this office. It's not that they are more important than some of these other technologies. God knows, just a return to the shale revolution alone should be good for 1 to 1.5% economic growth before you even get to crypto. And they are really centering on all technologies, let 1,000 flowers bloom approach.
Okay, that makes sense. Now, Perianne, just with a few minutes left, we've talked about this, assuming everyone that's pushing this agenda forward inside the government is working with the best intentions. But there are many people, roughly half the U.S. population, that is pretty skeptical of Donald Trump. The criticism is that he's often lacked the temperament or the interest to really see some priorities through, and that outside of a few issues like, say, trade and immigration, he can be easily influenced. Maybe some people think this is just an electoral gambit, right, to secure votes that help to push him over the edge. But the question is, is it sustainable? And maybe this is a good way just to think about what are the risks, like what could go wrong here, that the thing that you hope to see happen doesn't happen?
Well, I mean, I guess you point out some obvious things during Trump's first term, and I was one of the first to say, like, Trump's first term, they were not a pro crypto administration, and Trump himself came out and said he was a skeptic of Bitcoin. But I definitely think things have changed. I'd point you to Eric Trump's speech that he gave in Abu Dhabi this week. I think he's been an incredible asset to President-elect Donald Trump. He's obviously younger, going to be better, more quickly able to understand technology. It's usually the younger generations that adopt first. And he laid out really why his family has become so bullish on this technology. And it comes back to what I started with, is that this is a freedom enabling technology. And the Trump family understands that. They were debanked as well, just like the crypto industry. They had the Justice Department go after and attack their families personally. Same things happened in the crypto space. So I think it's kind of natural that the Trump family and this community of crypto have come together, because we've actually been through similar paths throughout the Biden administration. And I think they really get it. I think they truly understand what this technology offers and enables humanity and society. And they're committed to doing that. And even before Trump has taken office, he's already done several major things that are going to be game-changing for the industry. He's appointed multiple pro-crypto people in some of the highest offices in the cabinet and throughout the federal government. So I think it would be really hard for him to backtrack or change his mind at this point. He campaigned as a pro-crypto candidate, and I know he knows that he has things he's promised and he needs to execute on. So there is absolutely nothing that I've seen that would indicate otherwise. I will be the first to point it out in the event that happens. But we're walking into 2025 with incredible political alignment. And again, it's not just with Republicans, it's with Democrats too. We're a nonpartisan organization at the Digital Chamber. We don't really care if you're a Republican or a Democrat or a Libertarian or whatever. We just want to make sure that this technology has a fair chance of being adopted around the world. And this is about technology. It's about economic growth. It's not about where you sit on the political spectrum. So we expect, all parties to embrace this over time. And I think it's really just by circumstance that the Trumps have really understood why this is so important, because it's affected them personally, but they've come around faster than others. But I think it's only a matter of time before the rest of the world understands why Bitcoin is needed and how it's going to help humanity globally.
Well, we're past the hour. It's 3:03, and there's so much more that we all could discuss. I hope that the folks who chimed in today to listen to this really incredible conversation felt like they got many of their questions answered, learned a lot, and are leaving this call with a much clearer picture of where we might be headed. I'd love to have both of you on at some point, maybe in a year or two's time, to do a retrospective on what has happened so far during the second Trump presidency. But until that time, I would just like to say once again to Chris and to Perianne, thank you both so much, from myself, from Ninepoint, and from everyone who's taken the time out of their busy schedule to join us today. That really was a remarkable discussion. I'd like to think of myself as someone who pays pretty close attention to this, but I certainly learned a lot, and I'm sure that everybody else did too. So once again, thank you. This concludes today's webinar, the 2025 Crypto Outlook. I'm Alex Tapscott, and we will see everybody next time. Take care.